2019 could be a big year for IPOs. We have household names like Uber, Lyft, Pinterest, Slack, and many more looking to IPO at the beginning or towards the end of this year. And to run us through all we need to know about these companies that could be investment opportunities soon is Santosh Rao. He is the head of research at Manhattan Venture Partners. He's been covering IPOs even since TheStreet itself IPO'd. So very much a pleasure to have you here, Mr. Rao.
Thank you. Thanks for having me.
So the first big one on the plate, of course, is Uber. And they timed their IPO right after Lyft. So I was hoping to get your thoughts on those two ride-sharing companies that look like two of the bigger ones this year.
Absolutely. I think both the companies will IPO this year. Uber wanted to do it in the second half of 2019 based on the CEO's comments originally. But looks like because Lyft filed, they also wanted to get in. We'll see who goes first. But at this point, I think Lyft will go first. They will be well received, only because they will get the benefit of doubt. The market is still undefined. There is no real precedent for ride-hailing companies. So they come out and they get the benefit of doubt. Plus, they have a better path to profitability. They're more focused in their growth strategy. So I think, and they're North America-centric, so they've not made the mistakes that Uber's done. So they're narrow focus, but deep down, they go deep in terms of their operations. Uber will come towards the later part. They're both going to be opportunistic, like I said, but Uber is more a proxy for the ride-hailing industry. They have a global footprint. They're all over the countries, all the main markets. They're pulled out of China, but they still have an 18% interest through DD. So they have a leg there. They're in Southeast Asia, they're in Russia, they're in India, and then all over North America and Canada. So I think Uber has a big presence. And they have a number of levers to pull. They've got into adjacent businesses like the delivery business. They're getting into freight and a few other businesses. So I think they are wider. The focus is wider. The losses are bigger. So I think when you come out into the public market, you want a better financial profile. And I think at this point, Lyft looks like it has a better profile for a public market.
So that's a question I wanted to ask you as well, because the valuation of Uber, at least according to Goldman Sachs, is nearly 10 times that we're expecting of Lyft. Do you think that's fair?
Yes. I mean, it depends on how you value it. In 2018, they're expected to be around 10 or 11 billion in revenues. That's net revenues. So even if you give it 10 times sales, or even 8 times sales, which we have seen, like the IPOs in 2018. We did an analysis of all the IPOs, tech IPOs in the last couple of years, and the average was about 7 to 8 times sales. So even if applying that blindly, you're still looking at 80 billion right there. Then Uber Eats is growing very fast. That's close to be roughly 20 billion. Even based on Goldman's analysis. So that's about 100 billion right there. And then you have all these partnerships with DD and all that. So that's another 15, 20 billion. So you can get to 120 billion, but we'll see how it plays out. They're big in scale. Valuation can be justified, but we'll just have to see the whole financial picture and the quality of their growth profile.
No, but we are using 2018 as a metric for a lot of those numbers, and I think that it's a bit of a different environment for IPOs this year, wouldn't you say?
It is. It is. I think even the investors have become more careful. They've seen, they've got burnt with Snap and all the other ones. They don't want to buy into the hype that you get with all these consumer-facing internet companies. I think now they're more focused. They will analyze everything. So what you have here is a much broader question. These ride-hailing companies are more than just cheap rides from point A to point B. They're riding a secular wave. On-demand services is the future. People are moving more and more towards renting over buying, especially the millennial group, which is a highly it's a big demographic group. It's a growing group, very influential. So and that's what these companies are riding. That people want to rent more than buy. Middle class wages are stagnating. So I think there's a move towards driving for the drivers. There's a lot of demand for drivers, and then more than that, there's urbanization going on. All over the world, people are moving more to the cities. The public transportation systems are getting strained. So there's demand for alternative transportation systems such as Uber and Lyft, and these companies tap into that secular wave that we're seeing right now. So there is demand, no question about it. And then we're going to have autonomous cars down the road.
Which could definitely help margins, for sure.
Definitely help. Right now, 70 cents on the dollar goes to drivers. And that's a big share of the cost of revenue. So I think if you can eliminate that, minimize that, I think that's flows right to the bottom line. So you're going to see that change. It's going to be very convenient. It's going to be much more efficient. So all that is coming in, but it's probably 2 or 3 years down, if not longer. But we'll get there ultimately. But at this point, there is enough. For all the demand that you're seeing with these ride-hailing companies, according to Pew Research, only 15% of the population, the adult population, has actually used ride-sharing companies. And that's hard to believe. You feel like it's such a no-brainer to use that.
Well, especially if people are moving into urban markets, because I know that I live in New York City. I would hate to have a car here and find a place to park it, so.
Exactly, okay. But they're moving also to the suburbs, and they're going outside also. So I think that's what you're seeing, that people are using these services more and more. So the demand is there. Now, the only issue is the business model. They can refine it. Right now, they've been investing for growth all over. They're getting in new markets. Lyft just got into Canada, in the Ontario area. So they're in, I think, nine cities in Canada. So they're still just getting in, but they're predominantly North America based. So they have the Lyft, that is. Lyft is growing there. So these companies are growing. There's still a lot untapped market out there. Mm-hmm. There is competition, of course, like everything else, but these companies are the incumbent leaders.
Well, and I want to bring it back to your comment on millennials, because I think that applies to a lot of the IPOs.
Yeah, sure.
That applies to something that appeals to millennials like Pinterest, something that certainly appeals to millennials on vacation like Airbnb, for example. I was hoping to get your thoughts on Airbnb as a secular trend, and then also on things that apply maybe more to the app economy like Slack or Pinterest later this year.
Yeah. So Airbnb is a big one that we did not touch on. Based on their comments, the management comments, it's more later part of 2019, if not early 2020. That's where they prefer to do an IPO. Of course, all these companies are opportunistic. The advantage Airbnb has is that it does not need the money. It's well funded. In fact, there was talk of them doing a direct listing, just like Spotify, which did not need money either. So I think there's talk of that, but we'll see where that goes. But at this point, there is no urgency for them in terms of that. They're still growing in China, they're still growing in India, there's still untapped markets, there's a lot more growth ahead of them. And then they're not just sitting idle. They're moving up the value chain. They're moving into luxury. They're moving into adjacent businesses. So Airbnb is much bigger. Their algorithms or software is now much more advanced, much developed. They have good database right now, so they can target much better. So all those things, all those advantages that come with age, are playing into Airbnb's hands. So Airbnb is huge. That's going to be another success story down the road. Pinterest is a total ROI story, essentially. Advertisers love it because it taps into a very compelling demographic group, which is women, 18 to 35 years of age. These are very highly motivated users. They tend to buy, they tend to act, they come to the site to do something, either to buy or to do something, but the advertisers get the views that they want, and they get a good return on their investment.
And they get exactly the demographic slice they're looking for.
Exactly.
Okay.
And they get their analytics. Pinterest has invested in good analytic platforms, so they provide good service to the advertisers. They know what they're getting a good value. And other than that, the site itself is very good because you can come there one-stop shop for anything that you want to do. You come here and look at the site, get ideas, and do whatever you want, plan your whole thing, and just go. Now they have click buttons also. You click and you can actually take you to the site and actually complete the purchase if needed. So they are, right now that's not their main focus, but they will get there. E-commerce is a big part down the road. Right now it's still an ad-based model, and they will definitely layer on e-commerce down the road because it lends itself, the site lends itself to e-commerce.
That makes sense. But when I'm looking at these different companies, I mean, we've laid out the path to profitability for Lyft, Uber, even Pinterest. I'm looking at a company like Slack. and I'm not sure it's as clear what its path is to profitability. I was hoping you could lay that out or maybe see if that's a problem.
Yeah, Slack is an excellent company in terms of the service that they provide. They're all over. It's an enterprise, chatting service. So I think it's very well received. The big risk that everyone is worried about, or at the back of everyone's mind, is this another great service but bad business? Is it
Maybe like Snapchat?
Yeah, is it a good app as a tuck-in in part of a bigger product suite? So is it better off being part of Amazon, which has always been talked about as one of the acquirers? Is it a part of Microsoft? But though Microsoft has its own, they don't really need it. But is it going to be bigger? Is it going to do much bigger as part of a bigger company, as a broader suite? That's what we'll have to see. But at this point, their service is good, their client base is good. So I think they have definitely a path to profitability, and they're doing well. And that's the whole thing. The problem with all these consumer-facing or user-facing companies is you need to show some kind of a growth. We saw that, with Snapchat. They stumbled because right off the gate they showed that the user growth was down. Twitter initially, I remember, they came off the gate, but they didn't show the burst of growth in the user base. Those things kind of play into these companies where you have all these active users. But their user base is slightly better. It's more enterprise focused within the enterprises, so it's slightly insulated from just the whims of the consumer, the retail environment. It's more enterprise focused. So I feel Slack, at this point, I'm kind of lukewarm in terms of their IPO prospects. It's ready. I mean, on average, all these companies are about 8 to 9 years old, which is typically the average for private companies. For the past few years, it had gone beyond that. Like Palantir is 15 years old.
Well, definitely wanted to look at Palantir as well. That's one that's been long awaited for sure.
Yeah, Lyft is 7, Uber is 10, so things like that. But on average, you're looking at 8, 9 years, and that's about right time. Your business model has taken hold. Your top line is growing. There is a path to profitability. So I think, all these is also subject to the macro environment. We need to see, we have to see, hope that the economy stays the way it is. There is the risk on sentiment that we had in 2018.
Definitely. Do you think that will accelerate the IPO processes, though? Do you think that people will front load them to the front half of the year?
Absolutely. If they believe that things are falling off, we've had the longest running bull market, okay, since the last 10 years or even more. So it's been the longest running. So normally, when it stops, when it stalls after that, or God forbid if we go into recession, normally the lull after that can be pretty long. From the top to the bottom, to the peak to the trough, in some cases can last up to 2 years. We've analyzed all the top to bottom moves since 1950 in one of our studies, and on average it's been anywhere from 6 months to 2 years, where it just kind of slows down, and then again it takes a while to pick up. I'm sure these companies don't want to get caught up in that side. They want to beat that lull that comes after a huge rally. I'm sure it's playing on the back of their mind. But having said that, also, these companies are playing the long game. Okay, they're not playing for the one-day pop. I remember Visa, MasterCard, they came out at the height of the recession, and they still did well. If it's a good service with a good product, with a good financials, I think they will be well received. Maybe you won't get the first day 30% pop, but you'll still be well received. So I think, I'm sure they would like to get a good start right off the gate, but in case they have to wait, they will. They're playing the long game, and they want to get it right.
That makes sense, and hopefully the government shutdown doesn't keep them from IPOing for too long.
Yeah, I mean, at this point, it looks like at the margins, maybe it'll slow down a little bit. There's talk, we'll see where that goes. I mean, you don't want it to stretch for like a month, 2 months, and then there's going to be backlog and slowdown and everything. But at this point, it looks like, there will be some resolution. We'll see, you never know these days. But
certainly don't.
If it's in the best interest of both parties to kind of get this thing going.
Just to wrap up, there's a lot of names that we covered here: Pinterest, Lyft, Uber, Slack, Palantir, Airbnb. All of these are expected in 2019. If you're looking at, which one are you anticipating the most, let's say?
I think Lyft and Uber will be highly watched because they touch us every day. So people know about it. There's tremendous enthusiasm for it. There's a good lead up to this. There's a lot of buzz around it. So I think you're going to see that. Airbnb, when it comes towards the end of the year, that's going to be well received also. People will watch that. Then Pinterest will also be well received. It has a good model. The bankers need to position it very well. Get the message out that it's a pure ROI story, and it's not for everyone. It's a nice niche market, and they're very successful at what they do. So I think that. So I would say, Lyft, Uber, Pinterest, Airbnb in the order that they will come.
And if you were investing, do you pick Lyft or Uber?
I would go with Lyft.
Lyft.
The two things, and Uber seems to have run up a lot. It's kind of rich in valuation. It's priced to perfection, as you may say that, and they will execute. There's no question, no reason to expect that they will stumble. But they've had some self-inflicted wounds in the past with the culture issue, the drivers. They're big. They're all over the place. So there's some regulatory hurdles there. They face. In fact, Lyft has benefited.
Pushback from lobbies.
In fact, Lyft has benefited. With Uber facing all the brunt of all the thing, they have really defined the market, set the market, and Lyft kind of rode into this thing. So they've benefited from the second mover advantage, like they say. But
interesting, second mover advantage. That's a nice one.
They've taken full advantage of that, and they're executing very well. But I would say the upside at this point, from today's vantage point, Lyft has more upside than Uber does, and we'll see where it plays out.
Certainly. We'll be seeing where it plays out for the entire year, but very much a pleasure to have Santosh here. He's got a wealth of experience, and hopefully people can make their own wealth off of the IPOs in 2019.
Thank you.